Good morning, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the morning call, a live market morning call. Market's about to open. You're seeing this on tape delay, but we're going to give you some live market action here after the open to give you a little bit of a different take on things. But overnight, very quiet night overnight in terms of news. In Kiev, Ukraine, they had a peace accord that could perhaps calm some stuff over there, but I don't think markets were really all that concerned about that issue. So overall, like I said, it was a quiet night. Futures up 3 to 4 handles for most of the morning on the S&P. After yesterday, we did a really good job shrugging off Wednesday's red dog reversal. We've had 2 red dog reversals. Wednesday's was even more significant than the one we had last week. But we had 2 red dog reversals in the last 2 weeks, and both of them have been shrugged off, and the markets continue to hold higher. And that's what we saw yesterday. And now markets, the S&P is a stone's throw away from its all-time high above 1850. So people are maybe thinking today might be the day that we could blast off, get some follow through above that level as we've gotten a little bit of strength so far this morning. If you take a look at the chart of the SPY, you can see we're now open yesterday. As you can see, we had that big red dog outside reversal day on Wednesday that was more significant than this small little red dog reversal that we had last week. But we opened higher yesterday morning, pushed higher for most of the day, and gave you some spots that if you were short to clean those up and potentially get back involved if we hold higher and make that push to new highs. But the pain trade is still sort of in effect when you don't give people too much of a pullback to buy, you don't give shorts too much follow through to cover. And maybe people were looking for a little bit more after Wednesday's reversal, but they didn't get it yesterday. So I think a lot of people might still be stuck in positions or stuck on the sidelines. But as you can see this morning, we're slightly strong. We opened around the flat line but are pushing higher initially. And like we talked about, the 1850 level on the S&P is the key pivot to watch. If we can blast off to new highs, we might get some more short covering, might get some more people scrambling back into stocks. But yesterday, the big focus was on social media after the Facebook WhatsApp deal. And so when that deal was announced, first people analyzed Facebook. They said the price tag was too big, that this was a bad acquisition for them. But you saw the difference between opinions and the difference between price action. And Facebook has been tremendously strong. They've really figured out mobile advertising and things like that. The stock has been in a really strong uptrend since that first strong earnings report where they showed good numbers on mobile. And yesterday, stock was actually down around 4 or 5% on Wednesday night right after the WhatsApp acquisition got announced. But then yesterday, before the open, it was able to reclaim a lot of those losses. And then after a 30-minute down bar to start yesterday's session, rallied really impressively, finished up over 2% higher, and then this morning opening around flat. So holding on to those gains, looks like it wants to become a $70+ stock. You can argue about the price for WhatsApp and this and that. I don't think anybody really knows what the future holds for these instant messaging, social media type companies. And I think in general, Facebook has a big cash hoard. They're really earning a lot of money, and so they're using that money strategically to pick off companies that they think will be rivals to them. And I think analysts overall like the fact that they're chasing growth, and people are still piling into the stock. And people also talked about BBRY. BBRY has the BBM messaging app, and BlackBerry as a company is definitely dying a slow death. The mobile handset portion of their business in particular is really floundering. But what they've done is they've spun off BBM as an instant messaging type service, basically the same thing that WhatsApp is. And so when that news was announced yesterday, BlackBerry, which has a market cap of around $5 billion total as a company, versus a $19 billion acquisition cost for WhatsApp, this caught a lot of people's attention just for that reason. Whether or not it has merits or not, whether or not BlackBerry is going to be able to survive, who knows. But it does have a really nice descending triangle pattern here that you can use this downtrend line that's been in place since it made pivot highs in mid-January. If we can break above that downtrend line, we could get a squeeze in the stock that has a 20+% short float. So definitely something to keep an eye on there. If BlackBerry can get above that 200-day, basically climb to that $10 level, I think you could definitely see a squeeze beyond. The first stop would be up here in the high 10s, the pivot here, 10.85, and then if it gets beyond that, you could see it in the $11, $12 range in my opinion. So definitely something to keep an eye on. It's not one that I would look to put in the drawer for 10 years for retirement, but it's one that could give you a momentum type trade. People also talked about Microsoft. I mean, Microsoft is a behemoth of a company. They have a market cap of over $300 billion. So you're talking about, they have Skype. They own Skype. So that's at least one part of their company that people could be excited about growth in. But when you talk about the acquisition cost of WhatsApp is not as significant when you're talking about a $300 billion company in terms of the positive attention that Skype got, but could give some positive press to Microsoft. And overall, the chart has been looking really good besides that. And what you got was a really nice bounce after a pullback at the beginning of January. We talked about in Scott's 2014 predictions about looking for some sort of reversal around the $35 area to get involved in Microsoft. It's exactly what we got. Really impressive multi-day bounce, and then we just sort of traded in a range. And then over the past week, 2 weeks, we've built a really nice bull flag after a good start to February for Microsoft, and now we're looking like we want to break above that and break above this pivot that's here at 37.98. So this morning we're opening up. We're already at 37.97. I think this is a really attractive looking chart. I think you could easily see it back at the $39 area. If we get there, if we get a breakout above that area, who knows where Microsoft could go. I've talked about it many times before. They pay a nice dividend. They have the potential for growth if they start to make some strategic acquisitions. Take a page out of Mark Zuckerberg's book. But this is definitely one that on multiple levels is a value and a growth stock. Looked very attractive to me to get both of those things in one package. And then just the rest of the social media group sort of benefited from the crazy acquisition price that Facebook paid for WhatsApp. And Twitter is one that could come under threat from things like WhatsApp and Facebook. WhatsApp actually has significantly more active monthly users than Twitter does, but Twitter was able to bounce around 2% yesterday after selling off sharply on Wednesday, so that's at least constructive, but Twitter still has a lot to prove. Getting back here above the 21-day moving average is a good first step, or 8-day moving average rather. It needs to get back above the 21-day here above 58, and then the 50-day here around 60 would be the last major moving average for it to climb above to help its composure. But it had that big earnings gap down, only filled about half of the gap. If it continues to get rejected by that 50% retracement of the gap, then I think you could see this one head lower. But the next week, 2 weeks, will be very important for Twitter to establish its composure going forward. 3D printers had a nice bounce back yesterday. DDD led the charge. A big gap down on really weak guidance for DDD. This earnings report bottomed out around 55, had a really nice reversal day that day. The fact that it entered so much of the gap on day one sort of told you that it might want to fill that gap. And given the macro strength that we've seen in the 3D printers, not altogether surprising, but we did see it open below the 200-day moving average, so a caution was definitely not a bad thing. But we have seen it fill its gap very quickly, and then yesterday tacked on another 5% of gains above its 8 and 21-day moving average. If it can get back above the 50-day here, that would be very constructive. Open pretty significantly higher this morning, but has been weak so far, now trading around the flat line. Some people are talking about SSYS being the higher quality company here, and it is holding higher. DDD had led the charge for a lot of the rally for the 3D printers, but you can see this SSYS threatening this gap here. It filled most of it on this tail here, but then it's formed a nice bull flag over the last 3 or 4 sessions, and looks like it could head higher, and definitely looks like the cream of the crop among the 3D printers right now. I know Scott was involved in VJET as a laggard type play, and it's got some nice follow through today, so he's going to be smiling upon that position. Yesterday, it looks like a small bar in the context of the chart, but it was actually up around 3-4%, getting it back above the 8-day. Now it's back above the 21-day. Just a laggard type name with a big short float that could squeeze, and that's what we're seeing today with more nice percentage gains today. And then I'll just run through some high beta tech stocks real quick. We can talk Apple. Apple's one that has had a multi-day pullback back into the 21-day, but I think any significant dip in Apple, I believe, is buyable. They're buying back more stock. There's likelihood of larger phone, maybe some wearables and stuff this year, mobile payments, a lot of stuff going in Apple's favor here. It just needs to break above this downtrend that's been in place since last December. But it was rejected the first time around, gave you a little bit of a dip to buy back into the short-term moving averages, but strong so far this morning, definitely one that I could see continuing higher. And I'll go through a few that we've talked about on Off the Charts. We have a really long watch list right now on Off the Charts. If you're not a subscriber, I would definitely try it for a month. We've done a great job of identifying relative strength and unearthing some plays that might not have been right on your radar. Zynga is one that we talked about out of a wedge pattern, and it's got some really nice follow through to the upside. I believe these are the lines that we drew on Off the Charts. Really nice move, holding higher, forming another bull flag here in the upper levels. A 3-day consolidation could lead to more upside. Definitely constructive to see Zynga hold higher above its short-term moving averages. Just a couple other names I'll throw out there that we have put on there. Last night we added Pandora. It's holding higher as well, one of those media 2.0 type stocks that could get attention given the lofty valuations given to something like WhatsApp. Not exactly a direct competitor, obviously, as a music service compared to an instant messaging service, but Some nice price action there. The biotechs, Gilead is one of the names that should be on the tip of your tongue in the biotech space. It's holding higher, but still hasn't broken out to new highs, but looks like it's just consolidating, coiling potentially for another move higher. BIIB is one that I've continued to talk about that is a leader in the group that on any significant pullback, I think you should be a buyer of BIIB. ALXN, another one. I always type ALZ in. ALXN, nice calculated multi-day pullback. This is exactly what you want to see in a really strong stock is a calculated type pull-in, slow type pull-in into the short-term moving averages. Maybe you'd like to see the 21-day a little bit closer to price, but in a really strong stock, oftentimes the 8-day moving average is the one that supports price. And you're seeing a nice pullback for ALXN here, a nice bull flag. This is a really attractive looking pattern to me. Another one from off the charts that's been acting well, YY, holding higher, still above the 8-day moving average. Nice move there. This was highlighted as a laggard type setup, but we've got a nice price action there. And those are just a few names that have been on our radar, mentioned on off the charts, mentioned on the morning call and stuff like that. But in general, it's been a very stock-specific, short-term, sniper-type approach environment, which is, you can't really ask for anything more than that if you're a trader. If you're an active trader in particular, that's been sort of the sweet spot for the market so far this year. That's why we believe being educated, having the tools to identify these patterns is very important. So we have an education bundle that expires this weekend. We get our 3 top-selling courses for one low price. You get the course manuals. You get to learn the material. And I think it'll be very valuable in a market like this that we're having this year, where you have to be a stock picker. You have to be able to identify relative strength and patterns if you want to really achieve alpha. If not, you could get caught in this range, volatile, back and forth type trade that we've seen so far this year. We had that sharp sell-off, if you want to call it that. Then we had the bungee cord back up. And now we're basing it high, showing every once in a while we'll have a red dog reversal, some faulty action, and then you just have to be able to measure that. And what we've had is we've had 2 red dog reversals in the last 2 weeks. They've been shrugged off, and it looks like we might get back to highs. Let's take one more peek at the spiders before we go off air. It's just sort of holding higher so far this morning. It's a Friday. It's been a long start to the year. So I think in general we could see a quiet day today, as we do on a lot of Fridays. So keep it close to the vest and stay stock specific. This has been John Darcy here for your morning call. I'll be back here to do the daily recap.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.